And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Another bumpy week, but definite themes taking place underneath the markets. So let's not waste a minute. Take a look at some of the topics we'll be covering today. As usual, we're going to take a look at where we did close the week on the broader markets. From there, we're going to look behind the markets and really see what is bubbling up and taking place. Top headline news that impacted price action this week. I'll share that with you as well. And I talked about doing a deep dive into the markets. Downtrend reversals, base breakouts, yes, they are taking place. And then I do have several other topics relating to how to capitalize on the markets using ETFs and other themes that are taking place. So let's take a look at that news for the week. We did begin the week on a bit of a sour note. The UK came out with very high inflation numbers that spilled over into the US markets. Of course, inflation continues to be a bug, if you will, for the markets, but we did come out of that. Among the major moves last week, oil prices did rise quite a bit as crude inventory is decreasing. We're back up close to that $120 per barrel pricing for oil. And in turn, we'll take a look at how the sectors responded to that, because of course, in addition to being good for energy stocks, there are other areas that are picking up in response to that as well. Jobless claims came out last week and they dropped to the lowest level since 1969. Now, a lot of that is due to the fact that employers are not letting employees go. There is a lack of employees out there, and that in turn is going to continue to create wage pressures and keep that inflation high. We did see durable goods orders and consumer sentiment fall last week, both not particularly good, as durable goods orders speak to economic expansion. Consumer sentiment falling, all about that high inflation. So a 1-month print is not going to be that impactful, but certainly not going in the direction that we would like. Next week, we get inflation data. Some more really impactful inflation data will be reported. And then unemployment data for March will come out later in the week. So let's go ahead and get started here by taking a look at the S&P 500. This is a daily price chart. Those of you that follow my show weekly will know that last week we did call that the market's downtrend had reversed. We had a downtrend reversal, and of course, a lot of skepticism out there regarding that. But this week's price action should help confirm and help you believe in this reversal, and I'll tell you why. The broader market S&P 500 has now closed the week above this blue 200-day simple moving average. This is a longer term moving average, and a break above that is constructive. Now, we've had breaks above that 200 in the past. However, we still had resistance to the upside. At this time, we now are above each of these moving averages, another dynamic that is beginning to take place, and that is the shorter term 10-week, 10-day, this green, and then we have a 21-day simple moving average, the kind of purplish line here. They are trending upward, and this is really quite bullish. This is what you want to see. We can go back to these periods here that were pullbacks, not quite as dramatic as what we've seen this year, but that dynamic where these shorter term moving averages begin to trend upward. And it's not until then that we can anticipate the markets potentially finding support at these upward trending moving averages. That's a much clearer cut signal that the uptrend is in place, but certainly we are seeing the beginning stages here. Outside momentum indicators, RSI up above 50, positive territory and trending upward, and the faster moving stochastics, another momentum indicator, up above 50 and very much in positive territory. So good news here as it relates to the broader markets. as we go further, you'll see not every area is participating. The S&P was up about 1.5% last week, and there are only four industry sectors that outperformed the S&P. So this will all come through as we carry on here. And from here, as usual, I want to take a look at the 11 underlying sectors in the S&P 500. We are on the prowl for relative outperformance. In other words, where is the current strength taking place in the S&P? So in addition to those sectors, I've added this relative strength indicator, sorting it in descending. I'm going to go ahead and update that. We had a nice bullish close into Friday, which is constructive as opposed to people during periods of uncertainty. They will sell into a Friday close, not wanting to hold positions over the weekend. So from here, we can see where this relative outperformance is, and you may be surprised to see utilities. This was one of those four sectors that did outperform last week. Lots taking place here as it relates to upgrades and so forth. But I will tell you, these higher yielding stocks, I talked about energy prices rising, and that is in turn going to keep inflation high, not just because gas prices are now at $6 and above in some places, but also the oil products are used in the production of many products. So when we look at these utility, we can see this nice gap up into new high territory. So the other factor here within these utility stocks is the fact that they have raised their rates. They have an ability in this inflationary period to do so. I know certainly where I am out here in California, we've seen some of the utility rates triple, and we what can we do? So they are passing along any increased pricing they might see, but again, that high yield. Basic materials, we will dig more into this, but the group was up 3.7%. So this is another area where you have pockets that are great hedges against inflation. Subscribers to my MEM Edge report will know all about that. We've selected stocks in this group that have been outperforming, and then energy up 6.6% for the week. Of course, crude oil pricing going up is beneficial to these stocks. So we did have this pullback shakeout period, but we are back close to new highs here with this energy sector. So we do see a theme here as it relates to commodities and then higher yielding areas. Industrials, we're going to take a peek into the industrial group. I want to share with you a couple of dynamics there. It did underperform for the week, up less than 1%, but we are seeing that similar vibrancy to the broader markets up above the 200, shorter term MAVs moving up, and there's a clear cut reason for that. And then, of course, you want to pay attention to that underperformance, those areas that are potentially underperforming. Discretionary stocks are continuing to get uh, be underperformers. Of course, that consumer sentiment number, these retailers are suffering. There is, of course, heavyweight Tesla and Amazon both outperformed last week, so it's helping to keep the group in somewhat of an uptrend, but overall not the best area to be fishing in, if you will. And we can also take a look at consumer staples because they did turn bullish into the close today. I'll share a name there, all about high yields. And of course, their ability, those companies that can increase their pricing during this high inflationary period. So from here, let's take a look. Some of these sub industry groupings. We want to drill down a bit further beyond those sectors. And again, this is all about helping you prepare for next week and beyond. So what I've done is added what I view to be, from my work, very significant areas of the market. We're going to take a look at yields. They really did spike this week, crude oil pricing, and some of these tech areas that I have identified in my MEM Edge report as being very well worth noting. So again, that RSI indicator, I'm going to go ahead and update this, and let's take a look. I talked about yields spiking. This is the 10-year US Treasury yield, and we can see it really did pick up quite a bit. It's now at 2.5. This is in anticipation of the Fed's raising of interest rates and other dynamics here at play as well. This is also pointing to the fact that there is more in the way of money flows into the stock market, which in turn, as investors sell their bonds, you will see these yields increase. So I will be, again, talking about my MEM Edge report, talking about the other dynamics as far as what these higher yields mean. We are on the verge of a potential inversion of the yield curve, which can be very impactful. Brent crude, I mentioned that we did see the pricing rise again this week, and a couple of dynamics at play there. Certainly, inventory drops is one, but other dynamics as well. From here, we do, of course, want to pay attention to these areas that are generally underperforming. And this is good news. The volatility index VIX, and this, of course, is also known as the fear index. So, actually, good news that we are seeing a decline. We're getting back into this 20 level. And if we can get down to this 18, that's going to be pointing toward a more normalized market where volatility, potentially the intraday swings, will recede, which is good news. And other areas that we can take a quick look at here as it relates to the broader markets, we can see I talked about interest rates rising quite a bit last week. However, normally that is good for bank stocks. This is KRE, that regional banking ETF. And we can see that it's really trapped here. We're not getting a lot of traction here among these bank stocks. Other dynamics at play. Number one is the economic growth outlook, and certainly a slowing economy would reduce lending activity, which is a primary source of income for, of course, a lot of these banks. So from here, I did want to go ahead and share with you an item that could be useful for those of you that are, of course, we love charts. We're very visual. I'm going to share with you a very, uh, I think, informative view of the S&P 500. This is a map, and it's sharing with you weekly performance of those underlying stocks within the S&P 500. And the larger boxes very simply indicate that the stock that is in that larger box is a more heavyweight name in the S&P 500. So hence, any movement among these names that are in these bigger boxes are going to have more of an impact. So of course, we can see Apple, Google, Amazon, Tesla, all very much heavyweights. And the importance here is to have a really good sense of what is driving these markets at this point in time. So when we see these heavier FANG related, just mega cap names on the move to the upside, really quite constructive because they do have a big impact. They have a heavier weight. And then from here, we can see, you may not be aware, but this map is also sorted by industry group. And so quite quickly, you can see semiconductor stocks up here in the forefront. Subscribers to my MEM Edge report will be pleased to see this nice move in NVIDIA, which we added prior to this week. So good, nice uptick there. And then other areas that, of course, as usual, you want to be aware of where potential underperformance may be. I talked about bank stocks down here. We have that representation. And then, of course, energy stocks on the rise. So I do find this useful. I don't use it all the time, but when you are in this period of rotation, it can be really helpful as far as this is basic materials. I talked about that being a top up almost 4% for the week. And then from there, you can then access those areas that are on the move. So we're going to take a brief break from here. I do have lots more to cover. Stick around. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report,
I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer.
And we are back. I'm going to begin this segment by talking about we've already reviewed where pockets of strength are, areas that are on the move. And then I do have a handful of ETFs that I want you to be aware of if you are of a mind to participate in that strength, but are not inclined to dig down and uncover those stocks that are best poised to outperform. So first up, we're looking at the Nat Gas Fund. UNG is the ticker symbol. And we can see that it had a very significant uptrend breaking out of a near term base. The other thing I do want to point out, however, among this natural gas is the inherent volatility in this group. This is that spike when Russia first invaded Ukraine, and we can see that it spiked to new high and it gave back most of those gains and then some, and then had a rally. So it will bounce around, something that you want to be aware of, but certainly a way to take advantage of that move into natural gas. Next up, we're going to look at a rare earth materials ETF. And this particular ETF has a 5% yield. And that is very constructive. There is a continued uh, reduced supply of these rare earth minerals that are needed and metals. But what I wanted to point out to you here with REMX, the VanEck Vectors Rare Earth Strategic Metals ETF, is the fact that we did get this nice double bottom formation here where it found support at that 95 level. And then this week's price action is pushing this out of a potentially very lengthy base. So when you see these ETFs, these stocks, these areas that are on the move, I like to add an extra an a moving average in there that can be really helpful as far as identifying a potential buy point if you're not inclined, you don't want to particularly chase a stock. And so what we can see here is finding support at this upward trending 5-day simple moving average, but you're not really overbought. It's still in a position here. It can just break out of this longer term base would be quite constructive. Another one is steel. This, of course, is going to be another basic materials, metal related stocks, and it has had a significant move. SLX is the ticker symbol, and it does offer a 5.4% yield. More constructive looking on this weekly chart because we did have that nice base breakout, big volume characteristics this week, outside momentum indicators positive, but not overbought. I know a lot of people might think they missed the potential move into these metals, into these basic material areas. Here is another ETF, PAVE, and it's an infrastructure all about construction. And again, another one that has been on the move. I'm going to go ahead and put that 5-day simple moving average in here. You can see it's finding upside support. And let's take a look at a couple of the heavyweights stocks that are in this ETF. Deere is one of them, DE, all about agriculture and the need for equipment. And then we can also take a look at NUE, which is a very big, uh, certainly a well-known steel-related stock in a very confirmed uptrend. And I will share just one more because I have other areas of the market that I want to share with you. This is the iShares Select Dividend ETF, and really trying to showcase here the fact that these higher yielding stocks are in very high demand. So DVY is the ticker symbol, And let's take a look at a couple of the heavyweights in this particular ETF, OKE. This is a pipeline stock. It yields 5.2%, very confirmed uptrend. Philip Morris is another heavyweight in this particular ETF, 6.7% yielder. So if there's one theme that is clear cut this week, it is those inflation hedging higher yielding stocks. Of course, you want those growth dynamics to be in place as well. From here, I do want to share with you, I talked about cup with handle based breakouts, turnarounds. Yes, they are all happening out there. This is very unlike 2 weeks ago when we were pretty much running for cover as the broader markets were struggling to resume their uptrend. So, first up is a stock that is a Warren Buffett favorite, and it is Kraft Heinz. So, I am going to go ahead and mark this up. Let me see if I can pull up a better daily chart here, because what we are experiencing here is a cup with handle base breakout potential. And you'll want to know what to be on the lookout for here. See if I can get my drawing skills in line. Okay, there is that one. And then we do want to draw the handle portion. And a couple of facts here about this particular company. They offer a 4.1% yield. And what we are looking for here, among other activities, they do have now a joint venture in the beginning of this year with a plant-based food company. So they're entering into new arenas. So when you are looking for a potential entry point for a cup with handle, what you will want and need to see is a break back above this high on that handle formation. And that would bring us to a $41 uh, base breakout level. We can see the RSI trending upward, heading north. And take a look, this MACD down here, just now poised to have that black line up through the red, quite simply indicating that and confirming this new uptrend. So a couple of other areas that we can look at as far as action taking place, because we are seeing an awful lot of names that are beginning to reverse their downtrends. So I'm going to share with you a downtrend reversal that is looking very promising, and then one that is not quite there yet. And I'm sure you'll see the difference pretty quickly. This is Cintas Corp, CTAS. They do provide linens, uniforms for the hospitality industry, but also very critical to the medical profession as well. A real steady grower, but you can see that it fell out of bed with the broader markets. More recently, this break back above that 200-day simple moving average on high volume outside momentum indicators heading north. And also of note is the fact that the company did come out with their earnings on very recently. They showed 25% year over year earnings growth. Actually, this week they reported, and they also were 22% above estimates. So lots of good things going on there. And as we are on the theme of turnarounds, I'll share with you a name that is super early in its potential turnaround, not quite ripe yet, but this is eBay, and they have been getting upgrades. They did peak prior to the broader markets, so it's going to have more work to do than some of those names that peaked later in December and into the new year, but certainly encouraging, breaking back above this 50-day simple moving average. That is a good start. I will want to see it break further above that. We're not really getting the volume, but the outside momentum indicators are turning positive. So hopefully you can see quite clearly the difference there. Let's take a look at a base breakout. This is Teledyne Technologies, TDY, and this is in an area that I did want to share with you, and that is the move into aerospace and defense stocks. See if I can get this to look a little more lively here, but we can see that nice black line up through the red. This is your base breakout level, pretty good volume here, but we are actually seeing a lot, or certainly more than we have seen of late with these base breakouts. And the company announced their earnings in February, 68 8% year over year growth and a nice 2% yielder. So let's take a look at, I mentioned to you, I wanted to share with you in areas that are on the move. We've talked about metal stocks. And from here, what I am going to go ahead and do is get us into this sector summary. And I did mention to you that industrial stocks, we can take a quick look here on the 1 week performance of these underlying sectors. And you can see 1.2%, that's relative to the S&P, 1.5, but it does bear a closer look in industrials. And for the week, defense related stocks really looking quite constructive. And then also rail stocks, aerospace and construction appear at the forefront as well. So from here, what we can do very quickly is take a look at those underlying defense related stocks. And I do like to sort it by this stock charts technical rating. And from here, I am going to be more attracted to these larger cap names. So let's just take a quick look here, because what is happening in the face of Russia's invasion of Ukraine, we are seeing increased spending in defense, not just in the US, but globally. So these larger Lockheed Martins, Northrop Grumman, these larger defense names are globally positioned. They have clients around the world. They are better set up to benefit from increased defense spending. So on this daily chart with Lockheed, this is when that invasion first took place. And we did see a big spike in a lot of these defense related names, and then this pullback. So, this pullback, you're still in what I would call an opportunity phase here, because we're not overbought. We're trending upward. This MACD just now poised to turn positive as the stock remains in a confirmed uptrend. Let's go ahead back, take a look at, I mentioned to you, we're just going to do that stock charts technical rating again, and we can take a quick look here at Northrop Grumman. Very similar dynamics where it peaked in price here, pulled back, and still now, after finding support at this 21-day simple moving average, trending upward, and then this MACD crossover poised to take place. And so from here, what I do want to do is get into another area here within, actually, I'll just point it out to you and you can drill down from here, and that is rail stocks. I will go ahead and leave it at that. For those of you who have not already, please take a look at my MEM Edge report. I have a special trial offer this week, and I am going to dig down much further as far as the move into technology stocks. You'll want to read about that, the potential inversion of the yield curve, and lots more. Have a great weekend. If you like what you've seen, go ahead and hit that like button, and I'll see you here next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.